Welcome back to Morning Markets on Friday the 26th of August. Our weekly podcast is now live. This week myself and the panel homed in on the topic of inflation and how to beat the banks and the rates which are on offer. We'll also bring you up to date in terms of how we at True Potential are supporting the Great North Run, so please do tune in over the bank holiday. In terms of markets, it was a positive day for markets yesterday. Global equities were up around 0.9% on the day. But this morning, I want to focus on three areas: the UK, I want to look at the US and also Europe. This morning here in the UK, we received confirmation that the Ofgem energy price cap is set to rise from October from a level of £1,974 to £3,549, largely influenced by the rise in gas prices, which was stoked following Russia's invasion of Ukraine. The rise is broadly in line with expectations, so whilst a challenge to the UK consumer and their spending power, it's not a surprise, therefore it's been digested by the markets. There is a debate that this could rise again at the turn of the new year, and it's likely to be highly political in the coming weeks in the rally for Tory leadership. In terms of the US, central bankers, academics and economists right now are in Jackson Hole in Wyoming in the US at their economic forum. This is where they'll be discussing the state of the economy and the tools used to manage that. Today, Fed Chairman Jerome Powell will speak, where he's expected to refresh the guidance which he set at the last Federal Reserve meeting. He's expected to come in with a slightly more hawkish tone, which means he'll be talking about the potential to tighten monetary policy further from here. In the States, we also had the final economic growth figures for the second quarter of 2022. Now, we've already provided an insight to the estimates. If we look at what really happened, it was actually better than expected. So while still showing a decline, a technical recession, 2 consecutive quarters of negative economic growth, it was a decline of 0.6% versus that initial expectation of 0.9%, so slightly better than initially expected. In Europe, we received the minutes from the July European Central Bank meeting. The focus of the discussion was really on the newly proposed transmission protection instrument. This is really an instrument which ensures that whilst Europe are raising interest rates, it doesn't put certain member countries at an unfair disadvantage. Therefore, there'll be tools in place to buy bonds in order to control the rate in which rates are rising in terms of bond yields on different jurisdictions. It was also evident from the minutes that the decision to raise interest rates in Europe by 0.5% was supported by the majority. And the shift from the 0.25%, which was initially expected, was largely data-driven, influenced by the acceleration but also the broadening out in terms of inflation metrics, which we're seeing across Europe, but also globally. This is a global discussion at this point in time. In the inflation discussion, they also noted the pressure which a weaker euro is placing on inflation. They're essentially importing goods with a weaker currency, which is adding to those price increases. So please do tune in over the weekend, over the bank holiday, and we look forward to bringing you up to date here on Morning Markets on Tuesday morning.
If you're interested in taking your investing to the next level, or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.